Okay, so we are here today to go over the power of the 4-hour chart. I am showing this on gold, but you can literally use this on any single trading instrument. It works, and I've shown this time and time again, whether it's in the VIP services or whether it's in the free Telegram group. I have gone over it and I've said it time and time again. Wait for a 4-hour break of structure before you actually look for a trade setup, whether you're scalping or whether you're day trading or swing trading. This will help you. So I know everybody loves to trade gold, so I'm just trying to show them the power of this 4-hour idea. I'm not even going to say strategy, trading with gold. So the first thing we're going to look at here, of course, I'm on trading view, and then we will go over into Neo maybe later if there's still time, because I don't want to make this video too long, because it's going to go onto YouTube. So what we're looking at here, first and foremost, is our break of structure. So I've just marked out break of structures with green lines or red lines. Of course, green being bullish, red being bearish. Remember, I'm on the 4-hour time frame, and this is what I'm doing. I'm not going down to no other time frame to start looking for entries and all of this type of stuff. I'm just simply showing you the power of break of structures on the 4-hour chart. And we're going to start all the way from the beginning of the year. This is what we're going to do. Okay. So we're here in January, or this is even December to be fair, but we're going to start from there and we're going to start breaking it down straight away. So I've kept the rules very, very simple with this. All I'm looking for is a break of structure on the 4-hour chart, as you can see here. And then my stop loss will just be about 20 pips lower than the actual breakout candle. As you can see, it's this one here. So it'll be about 20 pips lower. And then my take profit's always going to be any of the highs towards the left. But of course, we're going to see how far price action does literally go. So when we're paying attention to this first breakout here, this trade here was obviously a winner. I'm going to scan over them like this so anyone can pause the screen, write down whatever they want to do in terms of, oh, this made 1 to 7, or this one done 1 to 9, 2 to 5, RR, whatever they want to do is completely up to them. So that was a winner right over there. We can see here was another bearish sell winner because we had a break of structure over here. And then we have another break of structure that happened here with this bullish candle. And now we have a 7R winner. So this was obviously the big winner that took place there. We had our first loser coming in January right here. We would have entered on the closure of this candle, to be fair. Our stop loss would have been above, and you can see price action obviously didn't keep selling. It just went back up and sold. So people are still free to ask me questions and anything like that. But of course, like I said, I'm not going to be going down into lower time frames to start looking for entries and drawing supply demands or anything like that. If we do want a video on that, then this video must get at least 30 comments and 100 likes minimum. I want to see 30 comments, 100 likes. If you post that in there, then I'll do another Zoom like this and we'll go down into lower time frame entries just to show you. So here we go. We've got another breakout here. And you can see my stop loss just below about 20 pips. And this was another 9R trade going all the way up to here. We have a loser here because we had a breakout here. And then from this breakout, obviously price action come back up to hit my stop loss. That's cool. We had another breakout with this bearish candle. And again, it hit my stop loss. That's fine. And then we had another buy breakout here, and it would have hit your stop loss because you would have looked for a buy. And of course, it just went straight down. But then later on, it gave you this buy here in the week. So it was your fourth 4-hour break of structure. So what we're clearly seeing is that when the market wants to consolidate like this, we can get up to at least 4 different turns of break of structures in the market. So this is what we saw in that week there. It's not something you see often, but this is Forex. Things can happen that you haven't seen before. Again, if anyone has any questions, just let me know. Put them in the question section there, and then I'll answer it. Where are we? Cool. All right. So, of course, this last one was a winner. This was a 3R trade for our winner. And then we had a loser over here with this candle breaking out. And then, of course, price action buying back up. We had a winner here for a 2.3R trade when we had the breakout of this level here. And then, oops. And then here we had another winner. This was a huge stop loss trade. So some people might have had some discretion to take this trade because your stop loss would have been huge. Your breakout candle was this huge one here. And of course, your stop loss would have been a bit above. And then, of course, we see price actions come back down. We see there's a breakout here, and this would have been a loser because price action came back towards your stop loss. Where did it come back towards your stop loss? To be fair, this is to give you, okay, where it would have hit your stop loss here anyway on this. And if anything, price action has obviously changed direction even after these two bullish. So this one shouldn't really been entered. So there's only one loser here. Give me a second. Boom, boom, boom. There's only one loser there because price action didn't actually hit your stop loss. It hit it here with this candle. And that's when another breakout actually happened for a bearish trade. So when this bearish trade, yep, go ahead.
Am I looking at a 371 pip stop loss for this one here?
Which one? This one here?
Next one. No,
yeah,
go to the right, go to the right. Yeah, that one right there, yeah.
Yep, this is what we're looking at. This is because this is gold on a 4-hour chart.
Yeah.
So like I said, this is nothing to do with anything of lower time frame entries and all of this stuff. I'm trying to just give the idea of understanding how powerful the 4-hour chart is regardless. So it's not a strategy I'm teaching at the moment. It's just showing people what actually happens and the realism of win rate even as well at the same time of why paying attention to the 4-hour chart would do so much for you. So some of these trades that even went on to lose, if you was on a lower time frame, they easily could have went on to win. They didn't have to necessarily lose. But again, beginners, we have to think of this as baby steps. A lot of people are going to be very new to trading or not just understand the concept. And the fact of that is when you start doing that whole thing where you're like, okay, go to this time frame, then go down to here and then draw this and then draw, they're going to be lost by step 2. I've been teaching people for a very long time now, and I'm fully aware of that. So I'm just trying to show people, if you just stick here, whatever you decide to do after that, completely up to you as a trader. But just seeing what I'm showing you here should be able to obviously help you in the long run. And again, this is for beginner traders. And even if you're well experienced, maybe you haven't just paid attention to it enough, but I'm here to help you. So here you go. Again, we've got another break of structure here for the bearish sell. Our stop loss here is like that, so it should be about 240. There we go. Cool. And there you go. So now on this trade here, let's see if it broke any bullish structure. Boom, boom, boom. Nope, 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 nope. Oh, no, bullish break. Was there a bullish break here? So here's our first bullish break. So this is why I said I might as well do a Zoom, because I was already going through all of this myself. And then I said, hold on a sec, I might as well do it with you guys and go. So if there's any questions, instead of me just making a recorded video whilst I'm doing what I'm going to do right now, you can at least ask me questions. So of course, if you can't stick around for this, I understand. But at the same time, like I said, it's about teaching people, you know what I mean? So here, our stop loss will be just below this candle, about 20 pips. We can obviously already see this would have been a loser. So like this, boom. So I say about 60 pips. Gold now. And this would have been a loser right there because price action never continued to go, but it was that simple. So our sell trade from here to here, oops, we'll grab this. This was a, even with that, this was a 2-hour trade. Very nice, very simple. Just paying attention to 4-hour structure. All right, cool. So where are we looking at? Did we get a bearish break of structure? Yes. So now we have a bearish break of structure over here. And I'm hoping this can help people find breaks of structure as well in the market. So the low was taken out there in the market, right here. And then our entry would have been on this candle. See if I've got a smaller one. Yeah, I do. Clone. Yeah. So I was only going to do it for a month going back, but I decided to actually say, okay, you know what? If I was going to make a video without you guys and girls being in here, I was going to do it for the whole year. So nobody has excuses. Nobody can say, oh, but this, but that. It was a whole year. So all the way up to now. So boom. So we can see our stop loss would have been hit, obviously, on this trade here. Let's make this a bit bigger. So that was about 65. There we go. Cool. And then we had another break of structure here. Clone. Boom. This one broke structure here. Clone this. Move this here. It gets a bit fidgety when there's multiple pairs. I mean, multiple breakouts. So we'd entered here. Stop loss above this candle. Not here. About 20, so 110. Bottom around about there. And this trade here gave us a 1.3 R trade, did go down a bit more. Okay, now it broke structure there. There, cool. Then we've got this one here, clone here, break of structure. This is all I'm doing in the free Telegram group. I'm just literally just waiting for my 4-hour break of structures, and then that's how I'm giving you ideas on trades. It's no different, literally. But of course, in the free Telegram group, we've got more time. So I'm focused on that said break of structure. I could say, oh, look on this time frame, look on that time frame, a lower time frame for entry. So here we would have entered here. Our stop loss below this level here. Where are we? Sorry, there, boom, and 80 right there. Cool. And this one would have hit our stop loss here. So we have the loser there. And this, boom, that would have hit our stop loss. But then we had another breakout here. So the whole idea of this, so people can understand, is that price action is not going to break structure so many times on the 4-hour chart in 1 week. So it's very easy for you to find what trend the market's going to go to in the week, whatever pair you're trading, if you're simply paying attention to the 4-hour and then going down. Here, clone, boom. Entry right there, stop loss below this candle. There, so about 84, boom. And then this trade went all the way up here. No, it didn't break structure, went all the way up there. So it's about 1.4 R trade here. And then, of course, you can see the inevitable. What starts to happen is that you manage to catch a huge breakout at some point. So where's our break of structure here? Boom, 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 boom. Our break of structure would have been here, right here, or here even is good. Yeah, because we've had one here. If you're lost with drawing your break of structures, just do this. So you can see, you can do this. So we use the path tool, and then you can just see your break of structures like this. So this went down, this went down, this went up, and this went down. So not that. And then even if you want to do that, you can just remove the chart by pressing this button up here. And then you can just do this. So there we go. So there, now we know our break of structure would have been right there. Switch back on the candles. Remove this. So we know our break of structure was there, and we can even see it was definitely here on that candle. And we would have entered here, just like this. Short entry. Just give me a second. All my wires are getting finished with all this Forex. Sorry. Can you hear me? Can you hear me on the mic? Let me know. Yeah, yes. Can you hear me, people? So I know.
Yeah, I can hear you.
All right, cool. Yep, so our entry would be on the closure of this candle here, and our stop loss is 20 pips above this breakout candle. So around about, where was this? So about 110. That's cool there. Of course, you're going to be very precise. You can be when you're taking the actual trade yourself, but you can see how I'm not even trying to do it to the pip. I'm even giving it a bit more stop loss sometimes and stuff like that, even if it hits it. This was a 2.47 trade. Here. Boom. Clone. We had a bullish break of structure here. So our breakout candles there. Very simple, very methodical, very simple setup this is. Nothing crazy. Entry on that breakout candle, stop loss 20 pips below. Let me zoom in. I can make it a bit better. Chart a bit bigger. All right, cool. So about 120, 130. Right there. And then this trade went all the way up. This trade was not playing. It's trading our ramp. This one was just money. We had a 4-hour break of structure there. So yeah, here we go. And this was a 6-hour trade right here. You can see it went up to there. And then we had a break of structure here. So you can see how what I'm doing from this, it's nothing that's crazy. It's not rocket science. It's literally so simple. So simple. And you're seeing every single week how many breaks of structure. So we're seeing anything between 2 to 4 4-hour changes, shifts in the market. So think of it like a connection, like almost cogs being made. So you're gonna see something like this in a week. So maybe it went bearish, bullish, bullish, bearish, bullish, or you're gonna see something where some weeks it's gonna do this, it's gonna do like 4, and then eventually it'll find its feet in and then go. So you're gonna see stuff like that. So it's between that amount. So think about it in that way. If you give yourself 4 trades that you're gonna be able to take in a week, you've got a good chance of catching one of the winners, at least 1 out of 10 charge. You're not going to be wrong every single time. That's what this is showing you, basically. You're just really not. So you're just literally trading the probabilities. So when we come in here, short, here, boom. And even if you're scalping, you're still going to catch one of the winners in the week. This is what I'm trying to say. The only time you have a problem when you're scalping is when you try to re-enter multiple times on that current 4-hour break of structure. Because if you enter maybe 3 times, because wherever you put your stop loss, that would obviously cause your win to loss ratio to be different. That's the thing. But of course, when you do win, you're obviously going to get a huge winner. There we go. So about 70, that's 70 there. That's cool. And this was obviously a loser anyway, so we don't need to worry about that. Cool, so let's do that. Yeah. I'm just marking them up so when we go back at the end, we can just literally count how many losers there were and how many winners. Thank you for everyone joining today. We had a break of structure here. I know we're all busy people. We've all got work and other monies to make as well, but education is always great. So we've got this here. Clone. We have our break of structure here. Stop loss below here. And oh, this is a huge stop loss, this one. So again, if there's obviously a huge stop loss like this, you don't have to take the trade, but I'm still going to mark it up because it's there. So we're going to go about 20 pips more than that. So it's completely up to the discretion of the trader. Remember, you can see how many there are. You don't have to take it if the stop loss is ridiculously huge. This is what it is. So okay, and then I'll take profit. Did it break structure? Nope, nope, nope. It stayed bullish all the way up to here. There we go. So even with a huge stop loss like that, it was still a 1.89 R trade. And even though this might look huge, even with a 0.01, if you lost this trade, you would have only lost about $40 to $50, but then you would have made $80. So of course, I'm not saying you should take that on a live account. If you have got enough capital, you can, but realistically, it's only $40, $50 you lost in a gold trade setup. It's not exactly $500 if you took it on a 0.01. All right, cool. Where we've got a break of structure here. If anybody's got any questions, feel free to ask. I'm just running through it. I'm already in March now, so we're getting closer towards, we're about midway. So if you've got any questions, please ask. Short position here. But this is literally how I would have recorded the video, just getting it ready for you. So I said, hey, it would be cool to just get people in on a live one. So what are we looking at? About 205. We're looking something like that. 210 is cool. All right, cool. Here we would have entered on that breakout there. Let's see if that broke out though. Let's not cheat. Nope, the breakout was here. There. And then it's even better because our stop loss would be smaller. Boom. 90 right there. And then this trade went here. So this was still a 2.R trade like that. A 2.8R trade, sorry. There. Okay, where's our next breakout? Did we have a bullish breakout here? To be fair, we had a bullish breakout here. So we can't cheat. No cheating here, people. If I miss one, let me know as well. And then we've got a long one. Yeah, boom. Stop loss 20 pips below this level. 240, about 240 there. Cool. There we go. Cool. All right then. That one, and then boom. So this one broke structure here. Clone this first. There. There. 20 pips below this. Okay. 45. Oh, that's too much. Right there. Yeah, about there is cool. And this one went up to a 3R trade as a winner. No break of structure. And so we come in here. And then we've got a break of structure here. We even got one here actually, right there. Boom. Break of structure, short position. So are people understanding what I'm doing right now, by the way? Just so I get it. Good time. I got in here late. It's going to be added to YouTube, by the way, this whole video. It's like a live YouTube video so people can see it. Because sometimes I'll do a video and then people say they don't understand, but at least you can understand. Or sorry, if you don't understand, you can ask questions. And then it's even better because I might answer something that could help someone that just watches it back. But this is literally how I'll do a live video, how I do a YouTube video, but live version of it. Here 93, so it'll be 103. So 103. Boom. Right here. There you go. This is another trade. So you had two back-to-back 3R trade winners, just using the 4-hour time frame. And then we had a break of structure here. Clone. Entry there. Stop loss. That's it. Boom. 83. Right there. There. And did it break bearish structure? Nope. Nope. It didn't break bearish structure. Yeah. Nope. Stayed bullish. Broke bearish structure here. So this trade ran up to here. That was a 1.2 trade. And then we had bearish structure here. I'm sure you're literally seeing what I'm talking about right now. This is what I've noticed doing this by myself, basically, what goes on. Our break structure was this candle, so we entered here. And then right here. So 99. Boom. Yeah. There's a 1.9 trade. And then we just go up. Again, if you've got any questions, don't feel free to ask me. It's like you're literally watching me live test, live back test, sorry. Okay, this was definitely too huge, this one here. We know that for a fact. I'm just looking at that candle, but let's just mark it up for jokes. Okay, cool. So this didn't even do anything. But in fact, let's see if it changed structure. Yeah, it broke bearish structure here. So this wasn't a great trade. So I'm still going to just call this one a loser. Okay, it didn't even do a 1R. So I'm going to call this one a loser to be even fair with that huge stop loss. Yeah. But we all know that that is ridiculously huge. If you enter in a buy of this and put your stop loss below here, that's like a very beginner mistake. Even though I know there's other ones that are big as well. But like I said, any of the big ones, come on, as a 400 pip stop loss. But we'll call it that. Let's not have favoritism. You know what I mean? Boom, boom, boom. All right, cool. So let's clone this. What are we bearish? Clone. Bearish. Yeah. There we go. So it definitely broke structure on this one. So it was this one anyway. So right there, because we pulled back. And then our entry would have been this candle here. Short. So we're in April now. I've marked up in the future from June as well. So we're not going to do this all the way to the end. As soon as we get to about June, it should come to an end. I've already done the markings, but then I said, hey, let me go back to the beginning of the year. Let's see this trade here. So you would have made some pips on this trade. I'm still going to technically call this a loser. So any ones that are less than a 1R, we'll call those losers as well, just to be very, very fair, regardless of how many losers we have over time. Because the whole point of this is not a set strategy, it's just to show you how much you're seeing from 4-hour breaks of structure. All right, cool. So we got that. Where's it? Bullish structure break next. Boom. Right now. This buys loan. Yeah. We got this. Stop loss would be 20 pips below that. So 88 pips. There you go. Perfect. Oh, this one hit stop loss. Let's see. Yeah, look at those pagans. Let's see this. Oh, entry will be there. Let's see if they give it to us. Nope, it hit stop loss. So let's just go back to check. So yeah, it would have definitely hit stop loss right there. 88 pips. Yeah, it would have hit stop loss. Can't cheat, people. That was a nice trade though. Boom, 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 boom. Yeah, this one broke structure as well. This seems like it was a terrible week. Yeah, be up here. And then below here. And 84. Yeah, they would have got you on this one as well. Okay, this is how you know. This is where they get you on stop loss trades. You see, they get you, boy. This one here would have hit stop loss as well. Let's just mark that up. Clone. Break here. Cool. So stop loss, stop loss, stop loss. No break of structure bearish. And then we have this one here. They didn't want you in this buy this week, by no means at all. We got break of structure there, and this one here would have been a loser. So you had 1, 2, 3, 4. This is great. I love this. The reason why I say this is because this shows you the realism of what can happen with you in trading sometimes. So you had 1 loser, 2 losers, 3 losers, 4 losers, and here's probably going to be a 5th loser. How do you train your eyes to spot break of structures? Very simple way, my friend. I'll show you on the next one. Well, in fact, I can show you. This one's a bit messy, but I'll show you on this one here, coming up here anyway. Give me a second. Let me just mark this. Did I already do it? Yes, I did. We would have entered here. Stop loss there. Boom. Right, we're looking at 219. 219, 2 a.m. That's about fine. Yeah, boom. All right, cool. And then we're gonna do this one. I'll show you. So I'll try and map out this week anyway, the best way I can for you, but give me a sec. Bearish. Clone here. Right over here. The funny thing is that I would even be teaching a lot in this video, but people won't watch it. Watch it, and then they'll still ask me, but what do you do? I'll be like, listen, I've shown you what to do. So you got here, boom, 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 break, cool, continuation, and then go. So get this cell clone. And I've noticed one thing as well, whenever you get weeks like this, it's because something like this is coming in soon. That's what happens when you take loads of losers. This is why they tell you you should stick to your rules, no matter how many losses you get in a row. If you feel it works for you, because you've done your testing, this is a form of testing, and you should stick to it, because you don't know when this one's coming through that will bring back all the losses that you just took previously. So then we had an entry here. Stop loss below here. And what's that? 88. Right about there. That should be fine. And then did we break structure? Nope, 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 nope. We stayed bearish all the way down to here. Cool. What did that give us? And that gave us back a 7R trade. So you can already see. So you had all of those losers, but then it gave you a 7R trade coming back down. So let me show you how I break the breaker structure down. So even let's start from here. So I use the path tool in TradingView. And then you can just map it out like this. You're just mapping out your lows and your highs. So even here, I'm going to do this again because that shouldn't have stopped here. That should have kept, that stopped there. And then price kept selling here. And then we had a pullback. We had a pullback to here. And we had a pullback down here. I'm using the wicks as well, by the way. And then this is why we had a break of structure there. Then it pulled back to here. And then it went up to here. This is why we had a break of structure there. And then, to be fair, this went even further. I'm going to move that. Boom. And then we've gone up to here. And then we've gone down to here. And then we've gone up to here. Give me a second. And then we've gone down to here. I'll just map it like that. And then I'm just going to move it. So once you've used the path tool to map out all your wick highs, your wick lows, this is what you're going to be able to see. So now you're starting to see the market structure. Then all you have to do is just switch off your candles like this, and you can see where I just marked out the previous break of structures. Every single place where I marked out break of structure, can you not see how it broke one of those triangle or V? Let's call them A's or V's. A's obviously pointing up, V's pointing down. You can see how it's broken those points. So does that answer your question, Leon? That's pretty much it. Once you've done it for long enough, I've been doing break of structures for at least 2 years now, and only been doing it every day, more and more, more and more, more and more. Do you understand? So I've had my eyes just trained to see it the best way I can of break of structures. So does that answer your question, Leon? Yeah, you need to practice. That's why I'm doing this live with you, because so you can see how I'm doing it rather than me just giving you a chart or giving you a video. I want people to be able to, you know, it's not always every day make money in the market, is also learn as well. And I'm trying to show you whilst the market's here, not just, again, a video after. Does the red and green line on NEO 4-hour chart mark the same zones, or those are just liquidity? No, they're also break of structures as well, by the way, because liquidity areas are always going to be highs or lows in the market. So, and most of the time, liquidity areas are higher highs or lower lows. So they're literally helping you to even show you break of structures and or change of characters as well. It's no lie. They're literally like that. It's no different. It's just the fact that there's liquidity there. So instead of me putting on NEO, just like liquidity right in above that area, I made it align so you can see it. But that's literally, it's no different from what I'm showing you right even here. So imagine this was liquidity. Maybe it was 1 hour liquidity, but it's also a 4-hour break of structure. Do you get it? So hopefully that answers your question, DLB. So there you go. So that's how I'm able to mark it out so quickly. So that's that. No problem. 4-hour, did this break structure? Okay, yeah, this broke bearish structure, so it's still bearish. Then did we get a bullish break of structure? Nope, 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 nope. Still bearish, and now we went bullish. Nope, it's still bearish. Still bearish. Boom, boom, boom. All right, let me just make this better for me. Still bearish. Where did we go? We went bullish here, though, for sure. Boom, boom, boom. It broke here. Here's that. Clone. Here. And here. So I won't be too much longer in here. Like I said, I've got my Zoom meeting in a bit. I just thought I'll put it there for the recording. Long. Here. Stop loss below. Where is this? 120. So about 150. There. This was a. Did it go bearish? Nope, nope, nope. Did it go bearish here? Oh, wow. Did it go bearish? It didn't go bearish, you know. Ooh, beautiful. Beautiful. Let's even see. So I'm not just making things up. We went from here to here, down to here, and this is how we went bullish. Then we went back down to here, back down to here, back up to here, back down to here, back up to here, then down to here, then back up to here, then down to here, back up to here, then down to here, then back up to here. You can see, just, I'll change that, and up to here. There you go. Look at that. So you can see how I'm not fabricating it. You can kind of just see it with your eyes after time. But if we remove the chart, we can see that price action. Where is it? So here, this was a wick though. That's the only thing. Let's see. We go here. Yeah, that was a wick. So that's the only thing that's going to happen to you sometimes. So you just have to do it like this. But then at the same time, you have to make sure you check your wicks. Because if the body of the candle, now, if this candle body broke this low, we would have gone bearish. But it rejected this low here. So this is why we're still bullish. So if you're seeing wicks rejecting any of the lows or highs, it's not considered a break. But if you see a body of a candle break, then yeah. So this trade here was now your big winner. So this is what I'm saying. Remember, we had all of these losers that happened in a row here. But then we had the big winner. Move this here. We had the big winner here again. Let me get rid of this so it's out of your way. That now made you all that money back. And this was a 5R trade. Like that. Boom. Again. Now we're going into May. So this is the last month, because when we go into the other month, it's there. So I'm almost done, people. Anybody got any questions so far? Any other questions as well based on that? But are you liking what I'm showing you right now, or is it at least helping you? I know some people, this might be basic for them, but I can never just guess on who knows what. So it's the reason why I'm saying this is because in the gold group, I keep going on about it. Well, not in the gold group. Let me be right, because people start messaging me saying, I want that gold group. In the free Telegram group, I'm always telling people, wait for your 4-hour break of structure before you take any trade. I wait mainly for 4-hour and daily to be together. And then I'll be looking for a trade setup on gold, because I know the chances are a lot higher of winning. But just the 4-hour alone can make you money. That's what I'm showing you. So here. So we've got a break of structure here. Bearish. How do you manage to hold your runners? I just hold them, and sometimes I take losses. The whole reason why I'm not super profitable this month, or at least not, let's not even say super, let's say even if it's an X amount of percent, that's decent enough. So I would say super percent is 10%, but let's say the whole reason I'm not like 2 or 3% profitable on all of my accounts this month is because I was holding trades. And some trades went back to stop loss. Some trades, they were going back into stop loss. I closed them and they went on to be winners. So this is why I say psychology is always going to affect your win rate as well. Because if you don't just let your trade hit, take profit, and you keep cutting your trades, then you're going to be in a problem. But for you to hold winners, you should, the only reason people have a problem with holding winners is because more than likely they took the wrong risk for that trade setup. If you took something, you could walk away from your phone and come back in a week or 2 weeks later to see if it won or lost, you will be able to hold your runners. It's that simple. It's literally that simple. It's a psychology. It's literally that. If you start trading with the adequate risk to your account size, or even to your psychology, should I say, you won't even be scared about holding a runner. I've left NZDCHF was the longest trade I've ever held for a Forex pair anyway. I've held gold for longer, but that was, again, I was in it on like a 0.03 or 2, and I held it for like 6 months. I'm telling you, it was stupid. I held it for so long, that trade. That was in 2022. But if you, but NZDCHF I held for like 3.5 weeks. And again, and that one wasn't even like I was risk low in it, but the way it was forming, I was just holding it and I was giving you all breakdowns on it. So after a while you get used to it, but at the same time you've got to let your trades play out. Here again is a ridiculous stop loss, as we can obviously see. Where are we? So about 330. So yeah, this stop loss would be too huge. So price action even came back. Did it even change structure? It did as well. So in all fairness, sorry, I didn't mention as well, you come out of your trade if structure changes. You don't hold the trade. So structure changes, it's also a loss as well. But all of the trades we've checked haven't, because I've been marking them out. This one here has, because it went down and changed. So here, so not here, here, mark it out on the candle. And then, yeah, boom, boom, boom. It did go on to lose anyway. So that's cool. Our stop loss got hit. But here we broke structure again. Right here. And then we went for our buy. So again, we're almost done. Don't worry, people. Going into it. And we're almost there. So 100 pips. There we go. And this was a 1.6R trade right there. Where are we going for a break? Boom, 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 boom. Yeah, broke there. Clone. Yeah. And then we're going here. Clone. Yeah. Put this here. Stop loss just above this candle bit. So 50. There we go. And there we go. Did we break bullish structure here? Nope. That's the last high. Managed to reject it. Melted. Melt. Look at this melt. Let's see if it changed structure though. Yeah. This could be considered a structure break here. So I'm gonna put it down to here. For sure that is a structure break. And the reason why I'm saying that again, pay attention. We go down here, we go up here, we go back down here, then we come up here. So what happened here? Structure broke. So we'll clone this. And go here. And we can see that structure break was a loser as well. So there's a structure break here. And then clone this, boom. Thank you for everyone sticking around. Appreciate you. And then we've got our stop loss here. So 230. Boom. All right, cool. And then here would have been a stop loss. Yeah, stop loss trade because we've gone back to hit your stop loss. But we did go bearish here, I believe. Let's see. Boom, boom, up. We've gone up. We've gone down. We've gone up. We've gone down. We've gone down. So we're up, down. Let's just do this to make it easier. Boom, boom, boom. Yeah, we go down. We go up. Yeah, we go up. And we come down. Yeah, we just came straight down. We didn't. Yeah, we just came straight all the way down. Get that there. Hit this. Boom. Straight all the way down. Then we went up. Then we came up here. Down here. Up here. Down here. Okay, cool. Oops. There we go. So what did we have? We had no break of structure until here, but it created these wicks. So you'd had a bearish break of structure here. It still could be measured from here. So this can still be measured as a break of structure as well, just to let you know. Here. And you'll see some systems do that as well. So you'll see I'm not fabricating it as well. If you check any other break of structure, change of character system, it'll probably show you something like that. So you could even consider a break of structure here from this candle. It finally broke that low with a candle close. Notice didn't break, didn't break, didn't break, broke. So you can count it from here, or you could count it from here. But for the sake of the video, so no one says you're cherry picking, John. Stop cherry picking. You did all of it. I'm gonna do it like this. Yeah. To make it as fair as possible from the clear break. All right, people. We're gonna round this up in a sec. Don't worry. This is why people don't want to do back testing. It's very boring. I get it. It's not just money, 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 but it's the potentials of money if you get it right. 78. There we go. And let's see if this managed to even do anything fantastic for us. Yeah, it did at least a 1.7, 1.6 trade. It's cool. And that wasn't a break of structure. Then we had another break of structure over here. Clone. Clone. Yeah. And then we've got another trade set up. Clone. And we've got this here. Oh, sorry, my bad. There. So huge. Got last two. What is this? 119. Let's say it's 120. So 40 will be fine. There you go. See if there's even here. Break. Nope, it didn't. So it gave us at least a 1R. Didn't break structure because this was our high. There we go. Cool. So anybody got any questions so far before I go back? Anybody got any questions? Any losers? Got any questions? Let me know now. This was a loser, wasn't it? Nobody got any questions at all? Cool. All right, so I've already done this month here. You can see I've already done this one. So I started here. This was where the video was going to be at first, but then I said, hey, let me go back. So let's go back to the beginning of the year. And let's stick these drawings in place. They don't move. Cool. All right, so count with me the winners and the losers, please. If I lose track, let me know so you can know what number I'm on, yeah? Okay, so we had, and we can go check the pip count after as well. As soon as this uploads onto YouTube, then it's got to download first off of Zoom, and then I'm going to upload it onto YouTube after my Zoom. So around about 8 p.m. London time, I would say. The latest should be around about 8 p.m. London time, if not before. Should be fine. I'll try and get it out there before I start making my dinner. Cool. All right, cool. So here we've got one winner, two. I'm just going to count the winners first, then go back and count the losers, yeah? So we've got one winner, two winners, three winners, four winners, 5 winners, 6 winners, 7 winners, 8 winners, 9 winners, 10 winners, 11 winners, 12 winners, 13 winners, 14 winners, 15 winners, 16 winners, 17 winners, 18 winners, 19 winners, 20 winners, 21 winners, 22 winners, 22 winners we're on so far. Let's get rid of this. That's my way. 22 winners, 23 winners, 24 winners, 25 winners, 26 winners, 27 winners, 28 winners, 29 winners, 29 winners, that was 30 winners. And then now we've got 31 winners right here. Well, this one's still moving. Kind of did it move at least this? Let's see. Oops, take this off. We've got 30. Yeah, it did. It went at least 1R. So we've got 30 winners right now, people. Can you see? Is this strategy what I just explained here? Even though it's not like a strategy, it's more the understanding of the 4-hour structure time frame. But just this idea of trading alone, is that enough for you to just see that what's happening with chart history data? Let me know in the chat, please. So we've got 31 winners, and I'm going to go check the losers now. Yeah. And then we're going to go check the pip count quickly after. Okay, don't start running slow now. Come on, don't run slow now. You got this. You got this. Computer. All right, cool. So we got one. I'm going to zoom in. I don't want to mess this up. If I lose count of a number, please let me know. 1 loser, 2 losers, 3 losers, 4 losers, 5 losers, 6 losers, 7 losers, 8 losers, 9 losers, 10 losers, 11 losers, 12 losers, 13, 14, 15, 16, 17, 18, 19, 20, 21. So right now you had 11, sorry, you had 21 losers and you had 31 winners right now. Yeah. So obviously you had more winners than losers. Trading a simple strategy I just created in what literally 1 second. If you're calling that a strategy, it didn't take me anything to create a strategy. Simple rules, just a break of structure, and then your stop loss 20 pips below that candle, and then obviously you take your trade. I haven't created RR on the trades, I understand that, but I believe every winner should have at least 1 RR in the trade right now. So I'm not saying this is a profitable strategy or anything. I'm just saying that, of course, you can see the structure and how you'd be able to trade the market. All right, cool. So let's see the pip count on this. All right, cool. So give me a second. Let's see if we're absolutely flying off here, if we're in profit. It'll be fun to test, like I said. I'm going to use a calculator to calculate. In fact, let me do it here. So we have 214, sorry, 200 and we're going to take 240. 240 plus 220, let's say 225 plus 225 plus 604. So let's say 600 plus 620 plus 285 plus 300 plus 5 plus 5 plus 495. This was 495. Yeah, 495 again. 495 plus from here. Plus 155. I always round up my stuff to fives. Just makes it easier for the maths. 155 plus. So I either round, most times I round down. I never really round up. 265. 265 plus 270. 270 plus 885 plus 815 plus 275 plus 275 275 plus 540 plus 540 plus plus 45. Move this over here. Plus 3, 4, 5 plus 215. I'm used to going there. 2, 1, 215 plus, oops, 215 plus 190 plus, come on, plus 67665 plus 800. Keep going to the third tab now. Plus 800 plus 165 plus 630. Yep, this is the whole boring part of it, by the way, people, but this is what you do in trading, is you back test and do all that stuff. 162, 165, 125, 25 plus, that was up there, plus 260 plus 235 plus 235 plus 265 plus 590 plus 590 plus what's there? 150, 50 plus 150 plus 250 plus 250 plus 185 plus this one here did get to 150 equals 11,685 pips. All right, cool. So let's go to text right in here. 11,650, I believe it was. 85 pips made. And we're just going to do the loss after. Okay, we're just going to run through the loss and then see. Let's see who's predicting, before I go through the loss, who's predicting that it's going to be negative? Who's predicting it's going to be negative? Who's predicting it's going to be positive? Let's see in the chat. Let's see. Let me see in the chat who's predicted. We've got Leon saying it's positive. Who else is still there? I know it's not me showing you how to turn $10 into $100,000, but this is the stuff you need to do in Forex to understand how you're going to have any type of consistently profitable strategy. This is only Leon. Nobody else is here. Okay, no worries. Leon, thank you for being here. I appreciate you, man. All right, let's go. I need to run through this one quickly because my Zoom's about to start soon. Switch this off for a second. A bit faster, hopefully. Okay, switch that back on. Where's my losers? All right, so calculator. So 1, 9. Okay, no. What was that? 11,685. It's better to do this. Take away 195. Take away One, is it 195? Take away 90. Please let me know if I missed one. Take away 90, take away 90, take away 145. Away 135, 135, take away. And this is an absolute random strategy I've just made here. The only thing that I'm showing you is how you can trade using the 4-hour time frame, just by the way. Yes, and that's why I've gone back to the beginning of the year as well. So there's no, I've just picked 1 week of where the market was just great. I'm showing absolute transparency and realism of just trading in general. Again, this is not my set strategy. I'm just using the 4-hour time frame. I made a strategy before I've even come here with you guys and girls. I literally made it in 5 minutes. I was just like, boom, let's just see. And this, what I mean by made the strategy is where you place your stop loss, where you place your take profit, how even how you enter, to be fair. I've made that because I don't always enter on just a breakout, because of course we wait for a pullback and then a re-entry somewhere else. Like I said, I'll make a video on that, even like this, if you want me to, in another video after. But I want to get 100 comments in this video. Sorry, I want 30 comments in the video asking for that entry strategy, and then I want at least 100 likes, and then I'll do the same thing. Where are we? So I don't forget my train of thought. 135, which was this one. Yeah. Yep. All right, cool. This loss was 290. Oh, this was a big loss. 290. 295. We're even gonna do 295. Come on. 295. Take away. Boom. 170. You can even see how I'm making it fair by rounding up the numbers even more for the losses to tens. So I've rounded down my winners and rounding up my stop losses. 60. 60, take away. 65. 65, take away. Take away. Yeah, take away 185. 185, take away. 240. Oh, it's getting spicy. 240, take away. This one here is going to be the one. This one here is the devastation one. 430. No. No. 130, take away. 200. Take away. This week here was bad. 90. Take away. 185. Take away. What's that one? 220. Take away. Done that one. And we're getting to the end now. I'm starting to breathe a bit more easier. Take away. No, 335. No. 335. Take away. 235. Take away. 90. Take away. This 7. Yeah, we can do 65. Yeah. The wrong number. 65. Take away. 135. 135. All right, before I press equals, what are we saying again? Are we positive or negative? Come on, let's see in the chat. Are we positive or negative? We're positive, yeah? Positive. All right. All right, let's go. I'm gonna press it. I'm gonna press it. I'm gonna press it. Let's see. Woo! And that right there, guys and girls, is how you make long-term consistent profits. Now, I want everybody to take this on board. This is why people are not consistently profitable with Forex. They are overcomplicating it and they are over risking per trade entry. So if you entered every single trade there at a 0.01, you would have at least I believe, what is it? You should have at least $83. Now I know that's not a lot of money after a period of a year, but you have to realize this if you're putting this up to different account sizes. So let's say if you were, I'm trying to think, if you had, it's a bit harder for me to do it based on account size itself, because I would need to know how much you're going negative by per entry. So if it's 0.01, let's just put it per lot size, yeah? So if you were on a 0.01, again, you would have made $83. That's a better way of putting it. Even let's go to here. It should be able to hopefully help us because it's gold. I don't know if it will work it out properly. Let's go into USD. And then let's go, what are we, 800 here. Yeah. So if you did a 0.01, we know this is, that's what I say, it doesn't work out properly, but it should be $83. If you did a 0.10, it will be $800 you would have made from the beginning of the year to now. If you were able to do a 1.0 on your account size per trade entry, you would have made $8,000 from the beginning of the year for now to now. And if you was able to do a 10.0, simply trading that strategy, you would have made $80,000. Now, like I've said again, this calculator is not calculating it properly when it comes to gold. And this is why I even struggle sometimes using gold. I know there are other calculators as well, but when I say struggle using gold, I mean between all of my different accounts I'm managing and the different leverages, because this calculator is set up to, I think, averagely about a 1 to 100 leverage. That's what I've managed to figure out over a period of time. I think they say here, so it's equivalent to this. I don't know if it's this, but when I've worked it out and saw what my accounts do on average is about a 1 to 100, this calculator is doing in terms of leverage. So yeah, that is the whole point of everything there, literally. Like, so if anybody wants to work out the win rate of this or whatever they want to do, they can do that themselves. Let's go to the calculator. It doesn't show us how much we lost altogether, but I'll just put this take away. So I'll just put pips made after losses, profit, pips in profit is or equals 8,000. Is it 8,000? Pips 303. Yeah, there we go. 303. There you go. So if anyone wants to work out the win rate, they are entitled to do that. There's nothing stopping you from doing that later on in the video. Just make it nice and big for everyone so they can see that. And this is what you have. And that was a simple strategy I made before I started this Zoom in a couple of seconds. Nothing specific, nothing, no supply demand, no support resistance, no nothing, people. Just literally the 4-hour chart has broken structure. I'm entering the trade. My stop loss is below that breakout candle. And obviously I'm looking to take it to its level. Now I know there's going to be certain people that are saying, but where do you know where to take it to? I get it. You're not going to see the exact level of where price would have gone to. So yes, this would have changed a bit, but you still would have had some type of decent results because price action has given you that. Now, more than anything, you can clearly see if you're looking for take profit levels that where all of our take profits did here, there was obviously previous levels of highs or lows. So you can see here was a high, this one here was a high as well, this area. So you can see all of these levels would have been marked out, and that's something you would need to learn going forward into trading, if you don't know that already, that you put your stop losses at lows and for buys, and you put your take profit at highs, and for sells you put your stop loss at highs, and then you put your TPs, you're looking for relative lows towards your area of where you're looking to aim towards. So yeah, that's pretty much it, guys and girls. I just wanted to show you how simple trading can be, and I wanted to show you the power of the 4-hour chart. Again, if you want me to show you entries on how to find trades like this, so maybe that would change a little bit, we need 100 likes on this video and we need 30 comments. If some people were bored during it, I apologize, but trading can be very boring if you're not making money every single day. But for you to make that money, you need to go through this, and you need to do this with whatever strategy you want to pick. So I hope this back testing made perfect sense for people. Has anybody got any questions or anything like that? Any questions, people? Anything at all? Okay, if there's no questions, then we will leave it there pretty much so, because like I said, I got to start my Zoom soon, and we'll leave it there. So it's very simple. So for anybody that wants to get into Neo can help you find entries into these trade setups as well. Neo just looks like this, just to show everybody before the end of the video. Some people might say, hey, what's Neo? Let's go here. Let's go here. So this is Neo. It's got a dashboard that reads a whole bunch of stuff. We can also see here, let's even go to gold, see what gold looks like. So here, Neo's been consolidating with gold quite a lot today, but you can see all the buy entries that you would have been able to catch, that you see gold buying up right now. You had all your entries here. This shouldn't be there because they took it out. It's gone now. Yeah, I thought so. It's gone because that took it out. I didn't refresh my chart. Yeah, but the sell entry that was given out today, I gave it out with Neo from the idea that we was in a 4-hour break of structure, a supply. At first, I was looking at this area here, but then Neo reprinted this area here for us. So it printed a new area right here for us, and it gave us a change of character on this candle, and that was a about 60 pip sell. Today, you could have easily caught for a scalp trade just based on the 4-hour chart breaking structure, which I've already shown you on TradingView. Recently this week, you've seen that there's 4-hour bearish break of structure. So it's really that simple. And this is why I tell people that you can use Neo to benefit you when trading like that. Another idea of what Neo does for you before I just quickly close this, we get to the end of the Zoom. So here's an idea of a trade setup as well. And you can see, so this is where you would be able to get better trade setups like this. So you've seen a 4-hour break of structure, which was over here. So when the candle broke here, then you had a pullback to a demand area that was formed down here. And then as soon as it pulled back to this demand area, you would have easily been able to enter on that box, which is automatically printed for you from Neo. Stop loss below this area. So you would have had a stop loss of about 30 pips, and you would have had a 1 to 2 trade today, simply like that. 4-hour break of structure, price action stayed bullish, pulled back to a demand, stop loss below the demand. You don't have to wait for nothing fancy here. If it does not break 4-hour bearish structure, you could easily have just put a pending order where this gray line is, stop loss below there, and then you could take the trade. If you don't want to take a pending order, just in case it does break the opposite direction in terms of price action, so let's say it went bearish, then you just wait for it to go here. You look, it's not bearish, you enter, stop loss below here again, take profit. Your take profit will be here. This is where you're targeting. This is your 4-hour liquidity. But if you go down to like a 1-hour chart, you can see that obviously price action has stopped at this level because it's gone up towards these liquidity highs here. Boom. So you can see price action grabbed 1-hour liquidity. This is why price action is consolidating. So there, hopefully that makes sense to people as well. Very, very simple trading strategy setup. And then with Euro ORD, here we go. So this is what I told people today. Look at the sell. Can't make this up, guys and girls. Look, change of character, turncoat. You easily, this would have changed to a turncoat before, but even if so, you would have just waited for price action to break out of here. You don't have to enter on the closure of this candle. You could have literally entered here because we've already seen before this candle was started to break out that you've got a bearish change of character. Easily entered here, stop loss below, above this level here. And right now you are in pretty much a 1 to 2 trade setup as well. Again, Your target area is this liquidity down here. Simple. This was a simple trade setup from London Open. Very, very simple. This is how Neo will be able to help you with what I just explained on the whole of trading view as well. All right, guys and girls, I'm going to leave it there. Like I said, I've got to get cracking to work. So hopefully this helps you. If you want to see me make a Zoom meeting video like this on Neo alone, let me know. If you want to see me make the entry video, let me know as well. Take care, people, and thank you very much for your time. I'll upload this to YouTube.